We are looking at the May 5th earnings batch, and the physical limits of the AI transition are suddenly very real. Today had hardware companies missing sales simply because clients cannot plug servers in. The U.S. government is now demanding a cut from custom chip makers. And a major e-commerce platform just revealed AI writes more than half its codebase.
Right. It is a heavy batch. The day basically split into hardware suppliers hitting a physical power wall, the government extracting profit shares from strategic industries, and software operating margins completely masked by paper losses. Let us start with that power wall. Supermicro and Lumentum had some wild physical details. Yeah. The bottleneck is no longer getting the semiconductors. It is local utilities. Supermicro missed top-line estimates because their customers literally lack the electrical hookups to deploy the servers they already bought. Single data centers are maxed out, so Lumentum is having to sell optical gear just to patch separate buildings together to share compute loads.
But Supermicro also had a really messy earnings quality issue underneath that, right?
It's a massive red flag. Under the surface, they burned $6.6 billion in cash, aggressively paying off vendors. The near-term cash flow squeeze is severe, even though management tried to massage the days payable math on the call.
Oh, sorry, I actually meant to say it's not just physical infrastructure extracting a toll right now. It is the government. We saw AMD and Cameco both hit with what looks like a sovereign tax.
Patriotic capitalism is the phrase Cameco used. The government wants equity-like cuts from private sector tech now. They want a 15% revenue share on AMD's custom AI chips sold to China, and they want an 8% upside cut on a planned domestic nuclear build-out with Cameco's Westinghouse.
That fundamentally rewrites the margin structure for those companies. It's no longer just export bans. The government actually wants a piece of the profit.
Exactly. Geopolitical friction is becoming a permanent variable cost.
Which is why the Shopify story feels like the weirdest contrast of the day. We're seeing real physical and sovereign constraints on hardware, but on the software side, the human replacement is fully here.
Shopify natively generates over 50% of its current code base using AI. Autonomous agents are building half of their automated enterprise flows without a single human developer. It's incredible structural operating leverage.
And the market completely ignored it.
Entirely ignored it. The stock sold off about 8% over a non-operating paper loss. They took a $581 million markdown on outside equity investments, which totally overshadowed the core software engine.
Investors punishing real efficiency because of a mark-to-market math quirk. So going forward, what's the biggest thing to watch here?
Watch the physical component squeeze. AMD warned that diverting memory to hyperscale servers is going to act as an inflation tax downstream. The AI build-out is going to eventually choke supply for consumer PCs and gaming consoles.
So the cost of AI shows up in your laptop price.
Fair.
The individual company episodes are in our daily feed if you want the complete call-by-call details on all of these reports.
Catch it tomorrow.